Hey there, and welcome. So, if you're doing any business in Malaysia that involves paying people overseas, you have got to get your head around something called withholding tax. I know, it sounds a little intimidating, but trust me, we're going to break it down so it makes perfect sense. All right, let's get into it.
So let's imagine this for a second. You hire a fantastic consultant from another country, or maybe you're paying for some software license. You send the money and you figure, job done, right? Well, what if I told you the Malaysian government is kind of looking at you to be a tax collector for that person you just paid? It sounds wild, but that in a nutshell is what withholding tax is all about. So let's start at the very beginning. What in the world is this tax, really? And more importantly, what's it got to do with you, the person who's actually making the payment? Okay, this definition gets right to the point. When you pay a non-resident for certain kinds of work they've done that's connected to Malaysia, you're legally required to withhold or hold back a piece of that payment. You don't send the full amount to them. Instead, you send that withheld part directly to the tax authorities, here, the IRB, on their behalf. You're basically making sure that any Malaysian-sourced income gets taxed before it even leaves the country.
This is the big question, isn't it? How do you know if that invoice you just got from your overseas vendor is one you need to worry about? Well, thankfully, it's not just a guessing game. There's a clear set of conditions you can check. Let's just run through this little checklist together. First up, is the person you're paying a non-resident? Pretty straightforward. Number two, is the payment for something specific, like a royalty, interest, or maybe a technical service fee? The type of payment really matters. Three, are they just providing a service from way over there, not actually running a full business here in Malaysia? And finally, is there some special tax law that says this payment is exempt? If you answered yes to the first three and no to the last one, well, then withholding tax applies to you. It's really that simple. All right, so you've gone through the checklist and realized, okay, this applies to me. The next logical question is, of course, how much? How much do I need to hold back? And the answer is, well, it depends. This is so important to remember. There is no single flat rate for this. The percentage you need to withhold is tied directly to the kind of payment you're making. Paying for a software license is treated differently than paying interest on a loan, and the tax rates show that. And this table lays it out beautifully. Just take a look. Royalties, which can be for things like software licenses, remember, are at a 10% rate. Interest payments? That's a bit higher, at 15%. And then you have these special classes of income, which is a broad category for technical fees, management fees, even renting certain equipment. That's back at 10%. So you see, you have to get the category right to apply the right rate. Knowing the rate is one thing, but actually doing it right is, well, it's everything. This is where we need to get serious, because all of the responsibility is on you, the payer. And the penalties for messing this up, they're pretty significant. You need to burn this number into your brain. You have just one single month from the moment you pay, or even just credit the money to the non-resident's account to get that withheld tax over to the IRB. It's a really tight deadline, and there's no wiggle room. So what happens if you miss that 1 month window? Bam! You're hit with an immediate 10% penalty. And that's not 10% of some interest charge, it's 10% of the entire withholding tax amount you were supposed to pay in the first place. That's a costly slip-up. But honestly, that 10% penalty is just the beginning of the pain. First, you've got that penalty. But second, and this is a huge deal, the entire payment you made to the non-resident, you can no longer claim it as a business expense on your own taxes, which means your taxable profit shoots up and you end up paying a lot more tax. It's a nasty double hit. And on top of all that, the government can come after you legally for the unpaid tax, treating it like any other debt you owe. Now, we've been focused on payments to people outside of Malaysia, right? But it's really important to know that the government recently expanded this whole idea. There was an update in 2022 that affects a whole different group of people you might be paying. So back in 2022, the rules changed in a really interesting way. A new 2% withholding tax was brought in. But this one applies to payments made to resident individuals here in Malaysia, specifically agents, dealers, or distributors. If your company paid one of these folks more than 100,000 ringgit in the previous year, you now have to withhold 2% of their payments from that point on. It's a big change you've got to be aware of. Okay, we've covered a lot of ground here. What it is, who it applies to, the rates, and some pretty scary penalties. But if you walk away from this with just one new habit, what should it be? Honestly, it all boils down to this. Before you hit send on any payment to a person or a company outside Malaysia,
Just make it a reflex to stop for just a second and ask that simple question. Does withholding tax apply here? Building that one little checkpoint into your payment process is the absolute best thing you can do to avoid a world of trouble